Let's get one thing straight. Paying taxes is inevitable. Overpaying them? That's optional. The wealthy know this. Corporations know this. And today, you're going to know it too. Because the truth is, the tax code isn't just a rule book. It's a roadmap. And if you understand it, you can keep more of your hard-earned money without breaking a single law. So let's talk strategy. First, stop thinking of taxes as a once-a-year event. Tax planning is a year-round game, and those who win it start early. The simplest concept is this: reduce your taxable income and increase your deductions. But the key is knowing how. Here's where it begins. If you're an employee, you're probably paying the most in taxes. Why? Because wages are taxed at the highest rates, and you have the fewest deductions. But if you shift your mindset and your income streams, you open doors the average person never even sees. Consider this. Business owners and investors operate by a different set of rules. When you earn money through a business, you can deduct legitimate expenses, home office space, equipment, travel, even a portion of your phone bill before taxes are calculated. Employees don't get that luxury. And if you're thinking, but I don't own a business, here's the reality. Almost anyone can start one. Whether it's consulting, freelance work, or selling products online, a small side business doesn't just generate extra income, it can create a legal framework for deductions. Next, let's talk retirement accounts. The government wants you to save for your future, so they reward you for it. Contributions to accounts like a 401k or IRA lower your taxable income today while building wealth for tomorrow. And if you're self-employed, you can take it even further with options like a SEP IRA or solo 401k, allowing you to shelter even more income from taxes. Now here's a tactic few people consider: capital gains. Income from investments is often taxed at a lower rate than regular wages, especially if you hold those investments for more than a year. It's called the long-term capital gains rate, and it's one of the biggest levers the wealthy use to minimize taxes. But let's go deeper. Real estate offers some of the most powerful tax advantages out there. Through depreciation, you can write off the wear and tear of a property, even if it's actually appreciating in value. And when you sell, tools like a 1031 exchange let you defer capital gains taxes by rolling the profits into another property. Then there's the holy grail: tax credits. Unlike deductions, which reduce your taxable income, credits reduce your tax bill dollar for dollar. Depending on where you live, you might qualify for credits for education expenses, energy-efficient home improvements, or even adopting a child. These are essentially the government handing you money for behavior they want to encourage. Of course, all of this only works if you're tracking your numbers. That's why the most tax-savvy people don't just wing it, they work with professionals. A good CPA or tax strategist isn't just an expense, they're an investment that often pays for itself many times over. Here's what you need to remember: the tax code isn't rigged against you. It's written with incentives, hundreds of them. Your job is to understand which ones apply to you and use them. So don't wait until tax season to act. Start now. Audit your expenses. Look for ways to shift income into tax-favored categories. And if you can, create structures like businesses or trusts that give you more control. Because at the end of the day, it's not about cheating the system. It's about understanding the system. The people who pay the least in taxes don't do it by accident. They do it by design. And now, so can you.